Is the Fed going to be able to offset the risks from the trade war with any action it takes this year and next?
We think that they will certainly take steps to do so. There has been a shift, of course. We've seen that in the Fed's rhetoric, signalling that they are prepared to ease policy to offset the impact of the trade dispute. And of course, even if we do get some sort of moves towards a resolution over the weekend, the longer-term concerns remain. For businesses, investment is perhaps not going to be as strong as it otherwise would have been, and this in an environment where inflation is low. We're not seeing inflation moving up in the way that perhaps the Fed thought that it would have done. And this gives the Fed scope to take these sorts of preemptive cuts, these insurance cuts, if necessary. We think that they will cut in July. We think that the Fed funds rate could be down by 50 basis points by the end of this year. But as Mary Daly said, data is going to be very significant.
Yeah, and you say there might be two this year, because a question that I've sort of been asking guests all week is what would be the point of doing just one 25 basis point cut this year? Is that really going to do anything for the real economy? I'm then told actually it's to lift confidence as well. And that brings me to your call, Wouter, because you think we could see 3 rate cuts this year.
We do, yes. We've been calling for the Fed to reverse its mistakes from the end of 2018. Since December, we said they need to cut twice and they need to cut now. We're already well into the year, so we now think they need to cut 3 times to actually get ahead of the situation again. And we would love it if they did 50 bips in July. We think they should do 50 bips, but let's face it, it's unlikely. Just like we just saw in the interview, the Fed is cautious. The Fed is moving in a piecemeal manner, and it's not ready to take decisive action as of yet, we think. They should, but they won't, even though the inflationary backdrop really calls upon them to do so. So we think they'll do it in 25 bips intervals 3 times by the end of the year.
That's interesting that you actually want them to cut 50 bips in July, because other people say to me, look, that would really spook the market. So is this for you what they need to do in order to be preemptive and get ahead of a slowdown or any further concern in markets?
Exactly. What we've been saying for the last 6 months is that the Fed has become market dependent. Basically, they're so far behind the 2- and the 5-year yield that they can't do anything with their interest rates unless they get ahead of the curve again. And that market dependency, they can really get into that, bite into that pie, so to speak, by doing a 50 bip cut. They would show that they're forward-looking again and they're back in control. That's what we're looking for. But again, unlikely, we think, for now, because the Fed is just too cautious.